Today, I want to take a closer look at Cadence Design System. The stock is down a bit after the company reported earnings. Earlier today, the stock was down roughly 4%, but things are picking back up. On today's episode, I just want to do a quick overview on this company and their earnings. At what price point do I think this is an attractive buy, in my opinion, and also a little bit of some of their AI solutions. So let's take a closer look in today's episode. All right, so for those that are not familiar with Cadence Design System, this is a company that provides software solutions that help the design process of semiconductor chips. So let's say you are a semiconductor designer like NVIDIA. You're going to have a chip designer. That chip designer is going to have license to this Cadence Design software and kind of create the next GPU for you. So obviously, this is definitely a big market right now, especially since not just semiconductor companies are the only ones that are creating chips nowadays. We also have big techs like Microsoft, like Google, like Amazon, also designing their own silicon. So we can see there's definitely a growth opportunity here, especially as more companies are also kind of increasing their AI chip solutions as well. So like I mentioned earlier today, when on pre-market, the stock was down more like 4%, sitting at $230. Right now, stock price are rising back up. I just want to take a closer look at their earnings, and I do want to say I have a few things highlighted that I want to discuss. One of the great things about their outlook or their earnings, they did increase their financial outlook for the year, resulting in a 14% year-over-year growth, and they are also expecting a 19% non-GAAP earnings per share growth. So actually, let's just get right into the great part about it. I actually wanted to take a closer look at how great this company or how this company has been growing their non-GAAP earnings per share, and we can see they estimate for 2023 to grow at roughly 19%. In 2022 it grew at 30%. In 2021 it grew around 18%. 2020 27%. So historically this company has grown its earnings by high teen digits, at some portions even in the 20s, and in some occasions even in the 30s. We saw 30% growth in 2022 and in 2018. So we can see this is a company that's definitely growing their earnings per share. It's also a company that's seeing nice revenue growth in the low to high teen digits, right? We can see in 2022 it grew 19%, the previous year 11%, and for this year is estimating 14 to 15%. All right, so before we go any further, I actually want to talk a little bit more about the company's current price and maybe when I would like to buy some position into this company. So Cadence, if we look at their current earnings per share guidance, at midpoint, it would be roughly $5.08 for this current fiscal year. And with the price point of roughly $240, the PE ratio is sitting at roughly 47. Remember, this is non-GAAP PE ratio. This is a company that's growing at roughly 15, at high teen digits on their non-GAAP earnings per share, but I wanted to be a little bit conservative and said that, hey, they're only going to grow 15% for the next 2 years after that. And we can see for the next fiscal year, that would drop down their PE ratio to 41, still somewhat expensive, and next 2 fiscal years, it would drop down their PE ratio to roughly 35.7. I do believe at 240, this is definitely an expensive company, but this is definitely a company that has numerous growth opportunities. They have a lot of gross margins. This is the best way to get into a emerging market like the semiconductor industry, but get in the software space, which has great margins, and we're seeing great non-GAAP earnings per share. Now, personally, for me, I would enjoy if the next 2 fiscal years we were able to drop down that PE ratio to the 20s, and for that to happen, the stock price would have to be somewhere around $200. So for me to ever feel maybe comfortable, maybe starting a nice position in Cadence, maybe right now will probably be very small, dollar cost averaging if I really wanted to enter. But if I really wanted to see a position in this stock, I think I would wait for maybe something around the 200 levels. Obviously, with the way the market is moving, I don't know if we're going to see that. So that's why, for me, if I couldn't wait, I would probably do more of a small dollar cost averaging over time. Before we go any further, if you want to learn more about the semiconductor market, make sure to join my membership. I do have weekly videos. If you are enjoying the episode and just want to support for free, just make sure to hit the thumbs up. Make sure to hit the subscribe button. Let me know in the comments below, are you bullish or bearish on Cadence right now? And finally,
Finally, I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
So now continuing with their earnings, the company did mention a lot about their generative AI and how this is making a significant impact globally. So Cadence is using their generative AI or AI in general for two different use cases. Or two kind of fuels that are fueling it. The first is obviously we're seeing this huge growth in AI chips. So they have companies like NVIDIA that are using Cadence Designs obviously to develop the next amazing AI chips. And then they also have big customers like Tesla, which are using Cadence to develop the Dojo AI supercomputer. So we can see that's one of the great ways that AI is fueling Cadence software solutions. The second way is they're obviously implementing AI into their software solutions. Right now, there is kind of a growing talent shortage of chip designers, and AI-driven design automation is crucial in empowering customers to fully realize their innovation potential. And they're seeing an increasing amount of adoption of their chip package board system generative AI portfolio. So we can see that there is two opportunities of AI fueling it. One is helping them kind of fuel their own software solutions, and the other is kind of their customers are kind of creating numerous AI solutions that obviously need Cadence software to kind of implement. I want to talk a little bit more about their AI solutions as well, just so if you're not familiar, we can get familiar with them. The first one that we know is Cadence Cerebras. And this is Cerebras or Cerebras. I'm pretty sure I'm butchering it. But this is an AI that helps with the kind of power, packaging, and area design process. So this is one that's going to help chip designers create more efficient chips. So this is one that they've had for some time. It's not necessarily new, but obviously with the way that AI is increasing, it's getting better and better over time. So this is a digital flow to meet these power performance, and area goals in some form of automated way. So that's the first solution. The second solution that they have, or one that they really talk about, is Verisium, and this is an AI-driven verification platform. And this is a very, very important portion of semiconductor or chip design. When you design a chip, you need to test and verify everything in that chip, right? The last thing you want to do is send these chips out to TSMC or Samsung or mass manufacturing and decide and figure out that there was a bug somewhere within your chip. So right now we're seeing a huge need for things like verification. For verification and validation, right? So they do have an AI solution that helps with that purpose as well. And most of these AI solutions are being powered by their platform. They call it the Cadence Joint Enterprise Data and AI Platform. And this is pretty much the platform that they're using, where they have all this data collected with all their customers to provide the best AI solutions for their software products. So obviously we can see how Cadence is already implementing AI into their products, which I do believe is a great move for the company. Now I wanted to take a closer look at some things that I found super amazing about this company and their most recent earnings. When I first looked at their earnings, I didn't think they were half bad. I was actually shocked that the stock was down, but we can see investors were kind of just pulling a fake. We can see right now the stock is pretty much up flat for the day. I do believe that it does seem like the market might be green right now, so that can also be something fueling Cadence at the moment. But they do mention that that emulation and prototyping, like I mentioned, that kind of verification has become a must-have part of chip tape-out and software. So they do have a lot of verification business solutions, and this portion saw a 27% year-over-year revenue growth following a record 2022 and Q1 2023. They do mention that they have two main products here, the Palladium Z2 and the Protium X2 hardware platforms. Just for those that are not familiar, I do have them open up here. These are, again, they're prototyping. They mentioned that, for example, Protium X2 is their newest FPGA prototyping platform, which delivers increased verification, performance, and capacity for development of complex system-on-chip systems. Like I mentioned, right now, developing chips is insane, especially with everything happening with all the kind of things you need to do, 3D stacking, and all these kind of creative solutions that we're getting in the chip design process. You have to make sure you validate, you have to make sure you prototype and verify, and Cadence is definitely a big player in that market right now. Let's see what else I have kind of highlighted here. They do talk about how their AI markets, like I mentioned, Verisium, which is that validation and verification AI platform, is getting great traction from their customers. They also mentioned that their digital IC business had another solid growth with 15% year-over-year revenue growth. Their IP is also growing at great levels because they are seeing this ongoing benefit of outsourcing trends. So overall, I want to say company did do some great earnings, and I was honestly shocked that the company's stock price did see a quick dive. Taking a closer look at the company's balance sheet, the company ended a cash balance with roughly $874 million. They have operating cash flow of $414 million, and they used roughly $325 million to repurchase Cadence shares in quarter two. We are going to see that this company wants to use roughly 50% of their cash flow from operations to buy back shares. I think that's great moves. And this is obviously one of the other ways that not only are they increasing in revenue, but they are trying to reduce their share count, and this is how they also accelerate and see that strong growth in some of their non-GAAP earnings per share. They do mention that they are increasing the outlook for the remainder of the year due to the continued broad-based strength across their technology portfolio. Demand for their functional verification hardware solutions remains particularly strong, and as a result, they are growing their revenue estimate to be 15% by the end of the year. They also gave us guidance for quarter three, and for quarter three, it does seem like they were being a little bit conservative, like they mentioned. They're seeing a huge growth in their hardware systems, but their hardware systems are slated for delivery in late September and early October. So for those purposes, providing their outlooks for quarter three, they're going to say that most of that hardware is to be delivered in quarter four instead of quarter three. So there is the probability that Cadence might beat their quarter three revenue, especially if they get the hardware a lot quicker or earlier than they anticipate. But it does seem overall for the long term, we're still expecting that 15% year-over-year growth on revenue for the full fiscal year. Just a quick look at stock-based compensation. I know a lot of investors are curious about that. In the past 6 months, the company has done roughly $150 million in stock-based compensation. But on the bright end, they've done roughly $450 million of buybacks. They did issuance about $77 million, but overall, they're still positive for the past 6 months and kind of reducing the dilution of their overall share count. For those that are curious of how much this company was expected to grow their overall revenue, previously their estimations was roughly a 13 to 14% year-over-year revenue growth. Now with the updated guidance, it's more like 14 to 15, so just a minor bump. The great thing is it's definitely going to see a huge bump in earnings per share. Earnings per share were non-GAAP earnings per share were previously expected to grow 16 to 18%. Now they're expected to grow somewhere between 18 to 20%. So that's a quick look at Cadence Design System. We definitely saw some great moves, in my opinion, for the company. I honestly was shocked when I saw the 4% decline, but I am more... It does make sense as the stock price is almost flat after the company reported earnings. Like I mentioned earlier on, for me, a really nice buying opportunity would be if this stock is closer to the 200 levels, in the low 200s. That's when I really would want to start to think about adding this into my portfolio. At the moment, I don't really want to add it, but if I was looking to, it would be more of a small dollar cost average.